Ladies and gentlemen, good day and welcome to Ganesh Housing Corporation Limited Q1 FY25 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajat Gupta from Go India Advisors. Thank you, and over to you, Mr. Gupta.
Yes, thank you, Michelle. Good afternoon, everyone, and welcome to Ganesh Housing Corporation Limited earnings call to discuss the Q1 FY25 results. We have on the call with us today Mr. Rajendra Shah, Chief Financial Officer, Mr. Neeraj Kalawatiya, Vice President Finance, and Mr. B. Ravi, Corporate and Financial Advisor. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. I now request Mr. B. Ravi to take us through the company's business outlook and financial highlights, subsequent to which we'll open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Rajat. Good afternoon, ladies and gentlemen. It gives me great pleasure to welcome you to the Q1 FY25 earnings call. I'm sure you would have had the opportunity to go through the presentation uploaded on the exchanges as well as the website. It is indeed a pleasure to state that this was yet another rewarding quarter for Ganesh Housing. Building on its performance quarter on quarter for the last 10 quarters, Q1 of FY25 was well on the expected lines. Let me begin by providing an overview of the real estate sector. India continues to be a driving force in the global economy, contributing about 8% to the GDP in 2023, projected to rise to over 9.23% by 2030. The residential market has continued to strengthen, with demand reaching an 11-year high during H124. Premium housing products priced over rupees 1 crore have emerged as the largest segment, accounting for about 41% of the sales. The real estate sector has emerged as the top choice among foreign portfolio investors, that is FPIs, due to the consumption-driven capex streams. The Ahmedabad residential market has shown significant resilience and growth in the first half of 2024. According to a report from Knight Frank, primary home sales reached a post-pandemic high of 16,113 units in 2023. And in HY 2024 itself, about 9,337 units have already been sold. This is a 17% increase compared to the same period last year, marking a 10-year high for half-yearly sales. A notable trend is the shift towards premium segment. Premium housing products priced over rupees 1 crore now make up about 20% of the market compared to 11% a year ago. This shift is driven by the introduction of new lifestyle-oriented projects, offering better amenities and larger spaces, meeting the elevated demand and resulting in robust sales. As we move into the second half of 2024, the Ahmedabad residential market is well positioned to sustain its growth trajectory. Factors such as high affordability, comparatively lower prices per square feet, and an improving local economic environment support this optimistic outlook. In line with these trends, Ganesh Housing is actively contributing to the sector's growth. Recently, we completed the Malabar Exotica project ahead of schedule, which resulted in significant revenue bookings during the fourth quarter of FY24 and continued strong performance into the first quarter of FY25 also. The sale deed execution of Malabar Exotica is currently in progress and is anticipated to be completed within this quarter. Malabar Retreat, launched in Q4 FY24, has met with the exact anticipated response. We have pre-sales of over rupees 72 crores and cash receipts of over rupees 7 crores. The trend of bookings for such premium apartments generally increase after the first floor and the sample house is done. Hence, we expect that these bookings should pick up in the Q3 and Q4 of this financial year. Further, as always, we are confident that this project also will be completed well ahead of its schedule. Our commercial venture, Billion Minds SEZ, continues to progress ahead of schedule. As already said, the marketing of this rentals for this phase to large IT companies is on scheduled start in Q3 of this year. Looking ahead to FY25, we are on schedule to announce the phased launch of our Million Minds residential projects, phase 1 in the third quarter and phase 2 in the fourth quarter of this financial year. These two projects collectively span a development of about 1.8 million square feet. Furthermore, the plans for the commercial project, One Thaltej, is in the approval stage. With a saleable area of 1.8 million square feet, this project is expected to generate anticipated revenues of about 2,100 crores and a targeted completion by H2 of FY24, as said earlier. There is no particular update in our Godavari Township project except for the fact that the surrounding areas, as we had told you in the last quarter, are continuously abuzz with activities, proving that our strategy to postpone its launch to the FY26 is correct. Overall, Ganesh Housing remains committed to leveraging these opportunities to foster the growth of both the company and the Ahmedabad real estate sector. We are confident that our initiatives, including the Million Minds commercial and residential projects, Malabar Retreat, the township project at Godavari, the commercial project One Thaltej, and the strategic land sales will drive value for our stakeholders. We have already laid out our plans for the next 5 to 7 years and are progressively, systematically going in that direction. Now for the financial highlights of FY25 Q1. We have registered the first quarter revenue of 221 crores, an EBITDA of rupees 156 crores, and a PAT of rupees 114 crores. Though the revenue is lower than the corresponding first quarter of FY24 or Q4 of FY24, it would be appropriate to mention certain important aspects in this direction. The corresponding first quarter of FY24 was an exceptional quarter with a whopping 161 crores of PAT, and hence is not exactly comparable to Q1 of FY25. Secondly, if you see the sequential numbers, that is Q4 of FY24 and Q1 of this year, the PAT has increased, which is in line with the trend seen in Q2, Q3 and Q4 of FY24. So the revenue from the completed projects also has seen a 40% growth Q on Q. Thirdly, we'd like to mention that even in this year, that is FY25, we expect to achieve a 30 to 35% growth in PAT over FY24. That is over the rupees 460 crores FY24 achieved, what we achieved. We see a 30 to 35% growth in PAT as the coming 3 quarters of FY25 are expected to be better quarter on quarter. Despite the significant capex in our ongoing projects, we have successfully maintained a strong financial position with surplus cash flows. The cash flows remain strong and will continue to improve in the coming quarters. Finally, I would like to mention that Ganesh Housing is well equipped to continue its path of profitable growth. Thanks to its strong brand, innovation, strategic capital management, robust financial health, and dedication to operational excellence, all supported by established governance frameworks. We are committed to continue our track record of exceptional performance, executing unique and value-added real estate projects, and be the leading brand in the years ahead. As it is said in Bhagavad Gita, Yat acharati shresthaha tat eva itaroho janaha sa yat pramanam kurute lokah tatah anuvartate, meaning Whatever actions great persons, and read here as leaders, perform, the others follow. Whatever standards they set, all the world pursues. That is our goal. With this, I request the floor to be open for questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Rishit Shah from Nuvama Wealth. Please go ahead.
Yeah. Hi, sir. Good afternoon, and thank you for the opportunity. So two questions from my end. Actually, for the first question on the Malabar A3, so we said we have kind of did a pre-sales of around 72 crores, 7 crore collection. So just a little bit on the project as a whole. So what is the expected GDV and the expected construction cost of the entire project? And secondly, what is the scheduled completion timeline when we start seeing the revenue flow into the P&L?
See, the total sales value of this project is around 450 crore, and the cost of the project is somewhere around 340 crore. And this is a two tower of the premium segment with 22 floor building, and with each unit is around having a minimum carpet area of 2,400 square feet. And in terms of the target timeline to complete the project, that is, as per our estimated schedule, we have taken a 3 years period. But as you see in last 3-4 projects, the way we have completed our project, we will complete that project ahead of the schedule itself.
So it could be well into March FY27. It could be in the third or fourth quarter of FY27.
Okay, great. And during this period, we kind of intend to exhaust the inventory, sale during the construction period, right?
Yeah, that's the mission. That's our plan also.
Yeah, mostly that happens with us when project is about to get completed completely. In this kind of project, we would have sold at least 80 to 85% of the inventory. We will keep some remaining base units for meaning some friends and family, but 80 to 85% we will be exhausting by the time we have completed major construction work.
Perfect. Yeah. Sounds great. And the second question, so we kind of saw, as you were explaining, we saw a dip in the revenue, maybe sequentially as well as year on year. So the fluctuation, in my sense, would be again in the land sale part. So can you give us a split? What was the land sale in the quarter and how it compared to the previous quarter and year on year as well?
Yes, you're right. Till the time, though the bookings may be there, the cash flows may be there, unfortunately, because the accounting standards, we cannot book the revenues till the time it is completed. And therefore, yes, the revenues from these projects may not come exactly the way the bookings happen. However, yes, as we had said, the strategic land sales keeps happening. Even this quarter, I think about 46-50 crores were from the completed projects, and the balance about 160 crores was from the land sales. And in the coming quarters, these things could continue, and maybe for another quarter, maybe 4 or 5 quarters or more, till the time, let's say, the new projects have come on stream. So this quarter, it is about 160 crores of land sales and about 46-50 crores of project sales.
Okay. And the project sales are largely related to Exotica, right?
That's right. Yes. Yeah. But that's a 40% increase year on year. Last year, the first quarter, it was about 32 crores or so. Now it is more than 46. That's about 40% growth.
Right. And last question, any new project additions in sight in the near term do we see?
No. All that we have announced remain. As I just mentioned, all those projects are on schedule, and so these are the ones which we have, which we're going to do. Let's say it is one Thaltej or residential, 2 projects this year. These are the 3 projects we will start this year. Nothing else is anticipated at this point in time. Of course, the SEZ will continue. It's going on really well, and that's slated to complete, as I said, maybe less than a year from now.
Yeah, and if the response is good, we may prepone some of the launches of next phases of SEZ commercial or SEZ residential.
Okay, sounds great. All the best, sir. Thank you.
Yes. Thank you.
Thanks.
Thank you. Participants, you may press star and 1 to ask questions. We'll take the next question from the line of Satyam Badera from Profit Mart Securities. Please go ahead.
We can't hear you.
Satyam, we are not
Badera,
able to hear you.
Please proceed with your question.
How does we plan to manage the operational aspects of the commercial SEZ project while concurrently constructing the residential projects and completing the remaining phases of commercial projects within the SEZ?
Yeah, by operations you mean arranging finance for the same. Right now we are sitting on, meaning we have financial closure for phase 1 of commercial SEZ has already happened. Meaning we have enough cash balance which will take care of entire cost of construction of phase 1.
And for residential?
Residential will come out from the bookings itself, right?
Yeah, pre-sales of resi itself will give enough cash to start construction of.
See, the majority of the cost is already incurred long back in the land itself. So that is already been spent for. There's no cash outflow for that. Only for the construction is what we need to spend. And more often than not, this comes in either from the accruals which are already there from our other businesses, other sales and the cash flows, or from the bookings itself. So it funds for itself.
Okay. Thank you.
Thank you.
Thank you. May I request all the participants who had joined the queue to kindly rejoin the queue by pressing star and 1. We'll take the next question from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead.
Hi, sir. Thank you for this opportunity. So, can you please share the revenue potential from projects being completed in FY25 and separately in FY26?
Please repeat.
Can you share the revenue potential of projects that will be completed in FY25 and also FY26 separately?
So, Gunit, in FY25, in fact, after we have completed Malabar Exotica, which is only few flats of Malabar Exotica for which agreement is yet to happen, are remaining. After that, we have new project which is launched after that is Malabar Retreat, which will take at least about 2.5 years from now to get completed. So we don't expect any revenue from projects to further come in rest of the FY25 or 26 for that matter. FY27.
But there will be sales from the past completed projects.
Yeah, we hold some inventory of some of the past completed projects like Maple Tree and Maple Trade Center, which is market value of that is roughly about say 40 to 45 crores. we can encash that, and that can reflect in our meaning project revenue. But other than that, for FY25 and FY26, we don't see any project revenue. But at the same time, we are seeing lot of traction and lot of attraction in terms of whatever land bank we are holding, which are getting sold at very decent prices, and which is going to give us continuous kind of EBITDA margin and decent EBITDA margin.
All right, sir. So for FY25 and 26, our revenues would come only from sale of our land banks.
Yes, FY25 for sure, and FY26 we need to see how the second part of the year, how the Godavari, the whole project starts, because that is slated for the H2 of FY26, as we said. If that comes in as scheduled, then yes, there will be project sales from that also. So that could be quite a major revenues coming from project sales at that point in time. From the mere residential ones which we have announced, there may not be anything in FY26, but from the new sales, which for the new project of Godavari, yes, we will see project sales.
All right, sir. So you mentioned that PAT to grow by 30-35%. So what kind of revenue sales are we looking at from a land bank in FY25? And also, can you share the revenue potential for projects being completed in FY27?
FY20. Yeah. What is the second question? Please repeat.
Can you share the revenue potential of projects being completed in FY27?
It is 450 crore.
The FY27 from the
Retreat.
Yeah. No. In FY27, yes.
Yeah.
The FY27, the project which will be completed would be Malabar Retreat, and that would be having about 450 or 470 crores of revenues, which could be coming in FY27. And from in FY25 that you asked, the revenues which we see, I have given you a guidance for the PAT, 30-35%, which looks to be definite. The exact value of the revenues is slightly difficult to tell because of the various price ranges in the land, but we do expect it to be about 10-15% higher than what we have registered in FY24. That's our expectation.
All right, so my last question would be, what is the current market value of the land bank which we hold overall as per your internal estimates?
Well, I've always maintained one particular sentence in this. It's very, very difficult to say. It can range from 15,000, 20,000 crores and beyond. And with every quarter, that value only increases by over 10, 15, 20%. But frankly, the value of that comes in along with the development of the project itself. And in that, the value of that land is much more than that. So once it's executed, it can be much more valuable than that. That's the way you say. And in the next 7 to 10 years, we already have projected that land bank which we have to be used in the various projects. And that is going to give us all the revenues which we have there, which is there in the presentation already.
All right, so unconstructed, we can consider baseline to be minimum 20,000.
Yeah, surely.
Yeah, much higher than that, but conservatively, 20,000 rupees.
All right, so thank you very much. That's all from my side.
Yeah, thank you.
Thank you. The next question is from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, sir.
Yeah. Okay. Since we have a lot of cash in the books, what is the average cost of the company incurring every year to accumulate land parcels? And ahead of that is how does the company plan to allocate its capital between ongoing projects, new developments, and potential land acquisitions? Hello.
Dipesh?
Yeah.
Dipesh, we lost you the third question. See, I think you'll have to repeat. I'm sorry, the line was bad. Can you just repeat your question?
Yeah. I want to know, since we have a lot of cash in the books, how do we plan to allocate that capital between ongoing projects, new development, and potential land acquisitions?
Yes. See, the ongoing projects and new developments are almost the same as we say, because every new development will have an increased cash inflows also, except for the SEZ commercial. If we decide to do the second phase of SEZ also on a rental basis, then yes, we will need a cash flow for that. But otherwise, it will be paying for itself like just the residential one, because we'll be selling and we'll be collecting cash. Having said that, all the cash flows obviously would first be will be applied for the ongoing projects itself, and we also have to look at opportunities to acquire new land, which is always a thing, because that's a raw material for the future. So as of March 24, if you have seen, we have got various amounts which have been allocated, I think almost like 400, 500 crores or more allocated for the land acquisition. So at that time, we had quite a few surplus amounts available. In this year, we see a good amount of cash surpluses coming in, and the way the costs are going to be incurred between the allocation between the land and the projects could be in the ratio of about 30 to 70 probably. So 30 in favor of maybe land acquisitions, for which maybe additional money may have to be given, or it will be just getting the land the sale deed in our name for the advances already given. But about 70% of this cash flows to be used for the ongoing projects, including what we are going to be announcing, which will be starting rather. I hope I was clear in that.
Mr. Dipesh?
We lost him again.
Yes, sir. We'll move on.
Yeah. Am I audible now?
He's there.
Yeah. So I hope I've made myself clear. Have I answered all your questions?
Yeah. But just wanted to know what is the average cost of the company incurring every year to accumulate land?
See, it's very difficult to say what is the average cost, because the land acquisition are happening in a different cases, where everywhere the rates are different. And mostly our land acquisition are happening on the untapped areas.
And structure of acquisition also is different, because you might contract for, say, 100 crores of land acquisition today, but that 100 crores is payable when he does, meaning vendor does certain things. So it's difficult to say what is the kind of amount which you outlay towards land acquisition in particular year. It is very dynamic thing.
Having said that, I would definitely want to add, Dipesh, that the track record of Ganesh Housing has always been to tap those land parcels which have not been in the vicinity, in the eyes of the general public, and therefore, more often than not, the price at which it is acquired is one of the lowest ever in the market. That is the reason why all these land which we have acquired over the period of years are giving us this kind of a excellent EBITDA margins of 70%, 79% and all. So I believe that this kind of looking to the track record, that trend would always be the same.
That's right. So, are we planning, going ahead, are we planning to hedge ourselves by doing a lot of JVs and, or are we still looking at acquisition of the land and then developing it?
No, see, it's always as per the occasion and as per the opportunity which comes in. At this point in time, we have our hands full with all the projects which are there. And yes, the land has to be always keep acquiring. But if something comes up wherein we believe that a JV will give us, because of the use of the brand Ganesh, which as I said is the leader, if that can be used and we get a good project where we don't need to invest in the land, we just become the developer along with them, or a co-developer. We are open to such kind of projects too. And looking to the future, yes, such kind of things might come up, but nothing which we can announce at this point in time.
Okay. Just one last question was that what are the pre-sale figures which are projected for FY25-26 from our residential projects? If any kind of guidance would be helpful. And what is the expected timeline for occupancy of the construction's commercial projects?
The first question, and I'll ask you to repeat the second question, but the first question, I think the guidance we would refrain from giving 2 years in advance. We've given it for this year, and I think towards the close of this financial year, we will be able to tell you more correctly or accurately what would be the numbers for FY